Hey, everybody. Welcome to Love and Reload, the voice of the relocation industry. I am your host, Ben Cuss. I'm so blessed and honored to be here live from the PrimeLending offices here in Plano, Texas, with my good friends, Scott Chapman and Jonathan Johnson. What's up, gentlemen?
How are you, sir? Doing good.
Dude, if I was any better, I'd be Scott Chapman right now. I'll tell you what. No, I'm doing great, man. I mean, hey, it's a nice day here. It's not quite as hot as it usually is. And rates are coming down, right, guys?
Dramatic drops.
Just kidding. Hey, we're going to talk about rates, right? We're going to talk about interest rates. We're going to talk about the government shutdown. We're going to talk about trigger leads. We're going to talk about WERC Global 25 from the Salt Palace in Salt Lake City. We're going to talk about all of it. Get in the comments, y'all. Check in with us. Let us know who you are, where you are, and what the heck's going on. Give your company a shout out. We will talk to you out there. I want to know what your thoughts are on the rate environment. Everyone's talking about interest rates right now and things of that nature. But we're going to get into it. Maybe a little overrated, underrated at the end. Might have some curveballs for these guys. You guys ready for this?
Always ready.
Yeah?
Always ready. Oh, yeah.
Does compliance know we're doing this right now?
No.
All right, sweet. Yeah. Awesome, man. Well, hey, let's jump into it, man. But it's great. I love your office, by the way.
Thank you. We moved in about a year and a half ago, and absolutely love the space. I've been at corporate for 18 years, and we were able to break away and get our own space, and it's a good move.
Yeah, it's awesome. My first time here was actually Cinco de Mayo party.
Mm-hmm.
It was awesome.
It was amazing.
It looks a little different.
Yes, there's no margaritas today.
No piñatas.
No fajitas.
Yeah, I'm a little disappointed in the lack of fajitas, to be completely honest. I thought that was like an everyday occurrence here. But yeah, no, it's great. And you guys got a bunch of folks here on your team here too.
We do.
It's a lovely group here you got.
Thank you.
Yeah, now is this just the relocation group here, or is this the whole?
No, it's not the whole group. So I've got my relocation team, I've got a retail team here, and then there's two other branches that share our space with us.
Okay.
Yeah.
Tell us just for people who maybe aren't acquainted with PrimeLending, tell us just quickly about the company before we hop into all the cool topics.
PrimeLending was founded in 1985 by Rosanna McGill, wonderful lady.
Did I meet her when I came last time?
You did.
I did, right? She's super cool. All right.
Super cool. I work for her daughter, who is the regional production manager at senior vice president, fantastic woman named Dawn Robinson. We've been around since 85 and top 10 lender in the United States for about the last 15 years. So we've grown leaps and bounds in the time that I've been here, and just all about quality.
Wow. And how long y'all been in the relocation space?
Over 20 years.
Wow. Yeah. Very cool. Hey, get in the comments, y'all. I want to hear from you. Let us know who you are, where you are. We got people checking in there. Producer Samara, appreciate you setting all this up here, checking in here. And it's a lovely day at PrimeLending. Y'all have a beautiful office. It's almost as nice as the Glomo office. One day, y'all, hang in there, okay? One day we'll have all this glass.
We're waiting on your party to invite us to come to.
Hey, man, any day in May, all right? It's not just Cinco de Mayo, okay? It's any day de Mayo, all right?
Any day de Mayo.
Sherelle Kilgore checking in.
Sherelle. Hey, Sherelle.
What's up, y'all? And Jonathan, maybe you give us a little teaser, too, about NTRP happenings, Mr. President.
Well, no, not yet.
It's not every day we have an incoming president with us.
Soon to be president. I know Sherelle is ready to let go of those reins and let me take over, but not yet.
When you ride to work, you got bulletproof panels on your vehicle, sir?
Oh yeah. My wife has already asked how she needs to present herself.
Is there a guide to that?
Oh yeah, she wants to be called the first lady, and she wants to be able to just ride in the passenger side and just wave.
Is she working on the wave? She's got a couple months to work on that wave.
Do a little princess wave.
Charles Beatty checking in. Hi, Scott, Jonathan, and Ben. What's up, Charles? At Acme. Jillian Guzda. Hey, wish I could be there.
You should have been here, Jillian.
Yeah, Jillian. What's up, Jillian? Come on. Somebody's got to work, Jonathan. It's not all fun.
Obviously not you, but
yeah, it's not me. Dang right. Daisy Sinclair, sun is shining here at PrimeLending. Gorgeous office and friendly smiles all over the place.
Always sunny at PrimeLending.
They should make a show like that or something. Hey, I want to get in. Speaking of it, I want to get into the interest rate situation.
Sure.
Okay. you must be asked this question a lot, so I apologize in advance. But what's going on with the interest rates right now? Can you describe kind of the environment right now?
Yeah, so if you look at an overall picture, rates have come down. When you look from the previous 2-3 years, I mean, they peaked at around 8% for a short period of time. They're in the low sixes now, depending on the program. A lot of people say the magic number is in the fives. A lot of people are waiting for that. We briefly touched that on a couple of products for a little bit, and then the Fed opened their mouth like they normally do and kind of reversed course.
When it goes into the fives, like when it dips its toe at like 5.99, does the phone just like blow up? And
The days are really, really busy. Yeah, we're ready for it to happen again, though. Like I said, it was maybe an hour where it seemed like I saw a little bit in the high fives, but it's low sixes are still amazing leaps and bounds better than when it was at 8%, even in the sevens. So volume has picked up. But there's still so many people that are sitting there just waiting for the fives. Problem is all the inventory is going to get snatched up. I mean, as soon as they dip a little bit more, everybody that's been waiting is going to jump off the fence and buy these properties. So we're telling people, buy now. We can refinance you later.
Sure. You'll take their call, won't you?
Absolutely.
In a couple of years.
Phones are always open.
Jonathan, should we just get used to 6, man?
I mean, when I bought my first home, I got 6, and I thought I was, the prince of something, because I couldn't believe that we actually qualified for 6, because average rates back then were 7s. Right. So, so many people out there are thinking, I'm just going to wait till I see the 2s and 3s again. That's not going to happen.
Well, and you probably did pretty well in that home purchase, didn't you?
Oh, yeah, definitely.
A lot of equity on that thing, probably raised the family in it and everything, and did all the things, right?
Yep.
Yeah.
And otherwise, I mean, I sat on the sidelines for a few years, a couple, but not by choice, but, just watch rates, go up. And you also just think to yourself, man, I'm paying so much in rent. Cause, if you're renting a house, like I was renting a house for years here in Texas and spending thousands of dollars in rent each month. And it's crazy.
It is crazy.
And you can't make any changes to your home either. You're just living in it, and your lawn looks like trash, and you're not going to fix it. I'm not going to like renovate my lawn, because like, why am I paying for $4,000 worth of sod, for somebody else's yard,
Right.
Exactly right.
Yeah. And the people that wanted to buy 2 or 3 years ago that have just been renting since then, think of the equity that they could have accumulated in that period of time. And instead they're paying 100% interest because they're paying somebody else's mortgage.
Talk to me a little bit about this whole dynamic you talked about with inventory, though. I think this is something that people aren't thinking about. They're just waiting for that rate to come down. What's going to happen when that rate comes down?
Like I said, everybody's going to jump off the fence and start buying up the inventory. So the properties that, like the pristine properties, the properties everybody wants, those are going to go quick. So then you have what? You're going to have multiple offers on the properties.
It's bidding wars again.
Right, bidding wars. So, I mean, if you think back to COVID days, there was people paying $50,000, $70,000, $100,000 above asking price because there was 15 different offers going in. And, hey, you need to waive the appraisal contingency too.
Which is always scary.
Always scary. So I don't think it'll be that bad, but it could be. I mean, you got to think there's a lot of pending buyers that have been sitting here waiting.
Yeah.
Whether they're in their parents' garage or their parents' basement or garage or whatever, but they're wanting to buy, saving that money, but they're waiting for that magic interest rate. It's not the right tactic, not in my opinion.
Yeah, I agree. I just, I bit the bullet and bought a year ago, last month. And, it was a great decision. My family's enjoying the home,
Sure.
and because I did that when nobody else was buying, the house was on the market for, 30 days, and we were able to get $20,000 in seller concessions. And they actually used that $20,000 in seller concessions to buy down the rate.
Nice.
Yeah. So there were rate buy downs that were only possible with seller concessions that I couldn't even do.
Yep.
And so I think they bought it down a point in the first year and half a point in the second year, and I was like, man, I'm just going to call Scott and Jonathan up, when this thing goes down,
Absolutely.
And, so yeah, I totally agree with you. Daisy's actually got a really good question. and then we're going to get back to this inventory situation. But Daisy from Frisco, Plano says, "What's the biggest mistake you see borrowers make, and how can they avoid it?"
I'd say the biggest mistake that causes hiccups is going out and buying a new car during the process, or going out and buying a bunch of
Do
furniture
people do that a lot?
all the time.
Why do they do that?
I don't know, because we would tell them up front, don't do it.
Is it because like they just got a new job and they're like, "Oh, mama gets a minivan, daddy gets a Porsche,"
They get excited because everything's new and shiny, and we're getting ready to be new and shiny. So it's like, well, obviously I need a nicer car to put in the garage. But the problem is they don't, and even though we tell them, I don't think that they realize all the time that we monitor their credit. We're required to monitor their credit. So as soon as that new trade line hits, we have to, we get notified, and we have to include that payment.
even after they've been approved.
Even after they approve.
So
Up
that's
until the day of
I wouldn't
closing.
know that. I would think, hey, I got locked into that 5.99,
That's what they
and I'm gonna now I get to go out and buy that minivan I have my eye on.
No. So, I mean, you have somebody that was qualified barely,
Yeah.
and then they go buy a big old truck that's $1,000 payment, and now all of a sudden they don't qualify.
Right. The debt goes up.
Yeah.
Credit rating goes down.
It happens.
And then what happens? They don't qualify at all, or their interest rate changes.
It
Both.
It depends. I mean, in some cases it just delays it because they still qualify, but we have to rerun everything through. Short delay. But in the cases to where their debt ratio was borderline and all of a sudden it's over, they've either got to sell that truck, get rid of that payment, or, I mean, raising the interest rate isn't going to help them because that just increases the payment. So it's either they've got to put more money down. It can cause a big snafu.
Wow. I'm hearing people, hanging on every word from the Fed these days, right?
Sure.
And I mean, I'm one of those people, and I like to show up at cocktail parties and sound really smart. I'm like, well, the Fed's going to come out in a week, and it sounds like they're going to, lower interest rates, and there's Vegas odds on these things and stuff. You can buy futures on it, right, and stuff. So I'm like sounding real smart over, drinks, and stuff. But I mean, is that always the case?
I mean, that they're listening to their words. Yeah. I mean, it's the market. It always prices in what it thinks is going to happen. Right. And they base that on a lot of economic indicators. They base it on what the Fed says, what they release. But like, as of right now, for the October 29th meeting, they're pricing it. The market thinks there's a 93% chance there'll be a quarter point reduction in the Fed funds rate.
Okay.
So that's not a direct correlation to mortgage rates, but it means that the overnight rate that banks borrow money from, and I don't want to bore everybody, but it lowers the cost of money, right? So there's a good chance that will happen. Now, the market, or since it's already thinking that, our interest rates and the bond rates actually decrease leading up to that. Then the day that they actually change rates, depends on what Powell says. His statement will come out and he's either hawkish or dovish. And what that means is he's either saying that the market is going to do good or it's going to do bad, or what he thinks is going to happen on the future cuts. So all of a sudden we're not thinking about today anymore. We're thinking about the future cuts. And this last cut, even though the rates were cut, rates went up that same day because
That's crazy. So rates were cut at the Fed level, but mortgage interest rates went up?
went up that same day.
How does that, I mean,
Because it's already adjusted and they were anticipating, okay, well, there's going to be 3 more cuts throughout the end of the year. What Powell said was, he wasn't real sure.
maybe
about
just
that.
2.
Maybe, yeah. Tariffs are bad. And like, he needs to temper his wording because he does affect a lot of the market. And so, yeah, they spiked a bit. And then they just released the Fed notes from their meeting today, and rates spiked again today. So because there's some dissent among the Fed members on what's going to happen on future cuts. So I haven't had a chance. That was since we met at 1 o'clock. So I haven't had a chance to dive through the notes, but yeah.
Do you spend a lot of time just researching what these folks are saying?
You have to, yeah. I mean, I do because I want to understand what's going on in the market and share with my team what, because they have to know what's going to happen with rates that day, or at least be decently equipped with knowledge on what's going on in the market and educate their borrowers, because it's ultimately not us that decide hey, lock your rate, we can educate the borrower and say, it's your decision on whether you're going to lock or not, because that's not for us to decide. We can educate them, but it's ultimately your decision to lock.
Yeah.
That makes sense?
Yeah, kind of. I mean, yeah. I got to tell you too, and I think I mentioned this to you before, but I think your newsletter that you send out, I'm on it. I don't know how I got on it. I must have blown some glass somewhere and ended up on this newsletter. But your newsletter is like the best
A whole bunch of
newsletter.
question marks just went above people's heads.
I
when you
know,
said
I
you
know.
might
That's a
have
little
blown
teaser
some
for
glass.
later in the, yeah, I know, right? That came out wrong. Sorry. It's Texas. I got to clarify that. No, I ended up on the wonderful Prime Lending newsletter. And no, but it's really great. I love the way that you explain the interest rate environment and kind of what people should be doing. And what do you send it out weekly?
It does go out weekly. Yep.
Yeah, it's really great. How can people subscribe to that newsletter if they want to stay in the know?
Hit me up and I can add them to it.
Okay. What's your email address? Or
S Chapman, SCHAPMAN at PrimeLending.com.
okay. Yeah, I think it's really great. I want to go back to this whole idea with the inventory too, and what's going to happen, because I want your opinion about. We were talking a little bit, Jonathan, about kind of what we suspect is going to happen, or what our feeling is. Do you think that there's a lot of pent up demand right now building? I mean, what is your sense from when you talk to clients?
Right now, we don't have anybody that wants to buy. And
Right.
You have these employees that are relocating, and they're relocating from a home that's got a 2 or 3% interest rate, and they're like, I'm not going to sell this home and then turn around and try to buy a home in maybe a larger market that with a 6% interest rate. And I, as we discussed earlier, I really think that sweet spot is that 5. You put a 5 in there as your interest rate. Like I said, 6.0, no. 5.9999, floodgates are going to open.
Yeah.
Just because they're going to only see that 5 no matter what.
Is that the thing that's really going to, is that the straw that's going to break the camel's back? Is that the thing that's going to open the floodgates though for our whole industry? I mean, is our whole industry right now waiting on that 5 handle on the interest rate?
I think I'm not sure that everybody's, but it's
Like, can you do us a solid and just like put one out, please?
It's what's really driving the market. You have a lot of your RMCs that are out there that are really dependent on those referral fees on a home sale and a home purchase. And when you have transferees that are holding off and not selling and are only renting at the destination, then there's a lot of money being lost there. And so that's what we need to get is back into the trend where everybody is selling and buying.
But like if a company is moving you and they're saying, hey, Jonathan, I need you in Tucson, Arizona to run a plant. And you're like, yeah, but my interest rate's really good. Like,
But they rent.
are they really, is that really holding them back right now?
Yes.
It's holding back
Wow.
from buying. They're still taking the gig, but they're renting. I mean, and that's something that we're talking to some of our clients about is, there's almost a new classification that somebody that used to be a homeowner, but they're a renter, but they're really a homeowner.
They're a renter landlord.
Right.
It's like a new class of,
Right. So,
person.
I mean, you've got a VP of a huge firm that has this property. They're just going to rent because they're waiting. Are you really going to just give them renter benefits, or are you going to give them homeowner?
do we need to adjust some sort of a policy? And really quick, shout out to Sheila Benavides out there checking in. Chappie and JJ.
Hey,
What's up, Sheila? Good to
Love
see
Sheila.
you. Yeah, get in the comments, y'all. I'm really curious what you're seeing out there. Charles Beatty says it's a mental game focusing on the 5.
Yep.
Yeah.
Yes, yeah, for sure. Do we need to change the policy though, like the relocation policies around this? I mean,
I think it's discussions that are being had or should be.
like how we had buy downs and stuff. I mean, is this, are we at,
I mean, the discussions were being had. It's just that nobody really wanted to pull the trigger. We saw a few companies that came out and said, okay, we'll do the buy down or we'll do the subsidies. But very few did. Very few, because everybody's just wait and see. That's what everybody wanted to do. They just want to wait and see because it's a lot of money to do those buy downs, and it's a lot of money to do the subsidies over a period of time. So all the other employers just say, you know what, maybe we'll just wait and see. We think the rates are going to come back down. And, they are going to go down. They're not going to go into 2s and 3s again.
Yeah.
But I think they will eventually go into the fives, but when? We keep inching closer, and it's like, it's like the tortoise and the hare race. you
Yeah.
know? And unfortunately, rates are the tortoise.
Dude, you said something to me right when we were getting ready to do this and doing our sound check. Jonathan, I thought it was great. You said 6 is the new 3.
Yeah.
And I'm like, man, I hope you guys print some T-shirts for Salt Lake City that say 6 is the new 3, because I think our whole industry needs to bang that drum.
Yeah. Yeah. I just, to me, I guess because when I bought my first home, I got a 6, and I thought that was completely amazing.
Yeah.
So to me, it seems like, now that the rates are back at 6, to me personally, it's just like, okay, they're back to normal.
Yeah. So 6 is your normal.
Yeah.
It's kind of like whatever, maybe, yeah, that's your frame. I remember talking to Randy Wilson, the former CEO of NEI Global, just a couple of years ago, sitting in her office in Omaha. Just amazing woman, right? And she pulled out a chart.
She pulled out
a chart. She had an 8 by 11 piece of paper, and it was a chart since the year I was born in '82, and I think it was a chart since '82 or maybe '81, and it showed that rates came from, was it 18% or 21%? 18%?
18.
Okay, you were around. Okay, 18%, and it showed how it kind of tracked down, and that this little thing that we were in, this little COVID kind of thing that we were in, was just a blip on the radar historically. And to your point, 6, 7, even I think she might have even been justifying 8 at that time, right? Was historically still a pretty decent price. And the point is, get in on the real estate, because I think the point you made, Chappie, if I may call you Chappie. Now that I know that's your nickname, but he's Chappie here. Get in the comments if you have any other things you'd like to call Scott. No, but I mean, you're right. As soon as the rate dips down to 5 and Jonathan's phone starts blowing up like a radio promotion, all of a sudden the prices are going to go crazy, right? All of a sudden now, instead of there being 200 houses on the market in Frisco, Texas, all of a sudden there's going to be 800 buyers, and 30 offers on each house.
And I got a good interest rate.
But I got a good rate, and there's going to be a bidding war.
My house,
and people are going to be waiving the inspection. Where I got $20,000 in credits, people are going to be paying $50,000 over a 10% increased ask, all because they're waiting for a few tenths of a point change in the rate.
That's exactly right.
And I ain't been exactly right in a couple weeks. I appreciate that. Get in the comments here. I want to hear what you're saying out there. Chris Lauterbach checking in here. What's up, Chris? Corporations could pay points. Yeah, I mean, when I first got into this business in the early teens, we were still talking about corporations paying points or buy downs, I think that's kind of called, right, in their policies. And they kind of went away because we were in this uber low environment. Is it coming back?
I wouldn't say it's coming back. We're seeing some, but not as much as you would have expected. And now that rates are starting to come down, it's like they're not. I don't think we're going to see many people adding it back in.
Well, we saw some corporates that said, okay, we'll offer the buy down, but the sliding on a sliding scale. And so
what does that mean, the sliding scale? How does that work?
Say, for example, they said the sliding scale would start at 7.99. So anybody that qualified for a rate over 7.99, so realistically 8, the company would pay for a half a point. Well, when the rates were really bad, then if you had an 8.5, or even some people were getting 8.75, they would qualify for that half point or maybe even a point. But as soon as the rates went down below 7.99, nobody could benefit from that. And I think that's because the corporates were like, well, we were offering the sliding scale. You're too good. You didn't qualify for it.
Yeah. So they're offering it to an extent, but it's really not moving the needle, it sounds like, for a transferee's decision making.
No, it moves the needle for some, especially the ones that maybe have the lower credit scores or have the little money down that may qualify for just a higher rate. And so they get a little bit of help. But, the ones that are out there that worked hard and got the extra, have the excellent credit, have the low debt ratios, they don't see that credit, that benefit at all.
Does a transferee now become a renter if they aren't buying a home at destination?
Yeah.
If they own a home at origin, but they don't buy a home at destination?
They're still classified as a homeowner, but they're not going to get those benefits. So typically after a year of having that benefit, if they never sold that home, they won't get that benefit again. So then
it expires after a year,
typically after a year.
And that's a big benefit because you're talking about closing costs, the realtor costs,
fees,
all that
title
stuff,
fees,
right?
everything. And then after that, if they get relocated again, say after 2 years, then they'll be relocated as a renter.
Oh yeah. Oh yeah. Now, even though they are a landlord back in Tucson,
Yeah.
you know, that's super interesting because that's another thing. I mean, you're waiting on the sidelines to get a couple tenths of a point lower, but you're missing out on $50,000 of hard costs up front. And for me buying a house, I don't know about you guys. You guys have all this equity. I could just tell. You guys look like guys with equity. You know, for me, it's all that down payment money was the hard part for me. You know, especially being a first time or second time home buyer. So that upfront cost was what was tough for me. Get in the comments, y'all. I want to know what you're thinking out there. This is great. Sherelle says she loves Chappie and Jonathan. Sherelle, any other new, unique, interesting nicknames out there? Put them in the comments. Sherelle says rates will come down. We keep hearing Q1 of 2026. It's always right around the corner, ain't it?
Right.
Yeah.
It's like Groundhog Day.
I mean, we've been saying that for what, a year now.
2 years now.
Yeah. We keep on saying next quarter, next quarter, they're gonna drop.
Man, what happens though if and when it happens and it comes down, and maybe it won't come down precipitously. Maybe it's just all a series of quarter point drops every 2 months, you know, and maybe that's that soft landing kind of approach, right, that the Fed's trying to accomplish. But I just can't help but think about coming out of COVID. And I don't know what it was that flipped the switch, but man, demand seemed to just flip overnight and we were drowning in it. And I wonder, are we headed towards another scenario where we're going to be drowning in demand?
I don't think necessarily drowning would be the right word, but I mean, I think we'd probably be treading, water on that one, because once the rates, I guess I have it stuck in my head that once the rates hit a 5, like I said, 5.999, I think people are going to start moving and shuffling. The people that were on the sidelines that still have their benefit, they're going to be the first ones to take off, and so they can still obtain that benefit. And then you're going to have the other people that are be like, okay, I guess I will relocate now and accept roles going wherever they're going to go.
Fascinating. So there's people that have moved that haven't exercised their benefit that are on the clock right now. Mm-hmm. So they're going to be in a rush to utilize that benefit. Makes a lot of sense. And then there's people that have been dragging their feet on accepting the assignment, right? And their employer's been patient with them. And they're going to say, okay, you know what? After all, I think we're ready for this. But then I also think about the general consumer market, because let's be honest. I mean, relocation operates as a subset of the general housing market, right?
I mean, just look at what the rental costs are nowadays, just here locally in the DFW market. I mean, you try to find a 2-bedroom apartment for a family of 4, you're paying probably more than you would pay for a mortgage anyway.
Yeah, it's getting interesting. We got people chiming in here. Get in the comments, y'all. Hit that like button, y'all. Let me know what you think out there. We got a couple other topics we're going to hit, but I want to wrap this one up because I think it's really interesting. Scott Williamson said, interesting topic, Ben, on adjusting policies to include property management and tenant rep services. Yeah, so if you don't sell your house, I mean, it seems cheaper than paying for realtors and closing costs. No offense, gentlemen. Yeah, no, interesting, Scott.
I've seen the subject matter as far as, paying for property management, but again, the benefit typically is for domestic relocation. Typically, a property management benefit would only be for a year anyway.
Yeah, you got to cap it, right? You can't just sign up for forever.
The only time you see long-term property management benefit is for long-term assignments when somebody's going overseas.
Sure. Like yeah, it's kind of like storage and transit would be for household goods. Great point. Cole Goolsby. We'll be talking to Cole live at Acme in Louisville on Friday. Cole's over there. He said that down payment these days hurts. Cole, man, it's really hurting for your generation, Cole. I don't know what your generation is, but I know you're younger than me, dude. Let me know, man. You able to get in that house, dude? You know, is that a kid? Is that a kid in your LinkedIn photo there? What's happening over there? No, it's hard, man. It's hard getting in a house, dude. Like I worry that like kids these days aren't going to own houses. Like you look at some countries and owning homes isn't a thing. I told my kid this morning, you know, you're always like telling your kids stories so they appreciate you. It's a dad thing, right?
Sure.
I told my kid I was like, you know, growing up, my parents didn't own a house ever. Like we rented houses and condos. My mom and my stepfather did. And we never owned a house. I grown up in New York, lower New York, White Plains. And, you know, that just wasn't a thing. And now, you know, here you are with a pool, you know.
Made it.
I digress. But, you know, I wonder, like, are my kids going to, you know, is there going to be a property owning class, you know?
I saw something the other day that the average age of a first-time home buyer is 37 years old right now, which is crazy because it was in its 20s. Yeah, it's affordability has just gone through the roof.
Yeah, I bought my first house when I moved to Detroit, probably in 2016, maybe. So I was probably 34, 35 years old. I was a vice president, and it was the first time I bought a house. Now, I had moved a lot, so I mean that, and I did not get home purchase benefits in my relocations, but I was a renter. So, what do you think about that? I want to ask that question too from a policy standpoint, and then we'll move on. But what do you think about renters getting home purchase benefits to get them into houses? Maybe as a way to kind of retain them, right? I mean, now you put down roots, right? Because if you're renting, you're kind of, you know, transient almost.
It's a large expense, so it depends on how bad the employer wants them. I think if you open it up across the board, that just increases that total relocation policy. I mean, that total outlay that they've got. I mean, we would love it, of course, but I think it needs to be on a case-by-case basis. I mean, because do you do that for an entry-level person that's just coming on, or I think you have to draw the line in the sand somewhere.
Yeah, typically you'd want to see it on a management level and up.
Right.
People that you're bringing on that have the salary that would support being able to have a new home. But as to your point, though, if they're renting, they're not necessarily planting their roots. They're not digging in, and not somebody that you can see staying there for a long period of time. You know, with somebody that buys a home, then you know they're way more committed to that space.
Yeah. Yeah, I think it could be a talent retention tool. I mean, as we look at the 10 years of employees shrinking, you know, just continuing to shrink. I think we were at a SHRM conference in Texas, in Austin, a few weeks ago, and I Googled it, and I think the average tenure was 3.7 or 4.7 years right now, you know, and you just, you know, you wonder, you know, what it's going to take to keep people in place. And relocatable employees are probably the hottest commodity right now. When I look at from a talent and recruitment standpoint, the easiest employees to place are people who are willing to actually relocate for a job. Now, every employer is not relocating people for jobs, as we know, unfortunately. But if you are willing to relocate as a talent, you are way more placeable. I say all that to say, if you've relocated for work, for an opportunity, you are way more placeable by the next company to come and frankly poach you or attract you right to the next opportunity. I mean, that's what happened in my career. I was relocated to Florida, and then I got relocated to a different company to North Carolina, and then I got recruited and relocated by a different company to Michigan, right? Because I didn't have those roots and I didn't own a home. So anyway, I say all that to say I think it's something that we could consider. I know that there's a cultural kind of resistance to it, right? Because it doesn't make sense, right? Why would you give somebody homeowner benefits when they're not a homeowner? But Sherelle gets in the comments, and she actually brings up a great point. Brett Lyons said on the WERC webinar that once a homeowner, always a homeowner for Chevron. Wish all programs were like that.
Yeah, I like that.
That's pretty cool. Sherelle, thank you.
Can we make that law, Sherelle? She's the president.
Yeah. Before you go out, sure. I'll just make that so. But it's true because I was a homeowner and then I became a renter and now I'm back to being a homeowner, right? So it doesn't mean you won't go back to it. Caroline Cook, hey, what's up, Caroline? Says my mother-in-law said when they bought their house 50 years ago, they were happy with a 22% rate.
Wow.
Bless their heart, Caroline.
22%. Again, that sounds outrageous now, but 50 years ago, you bought a house for $80,000 or
Dude, I heard 8 is the new 22.
Yeah.
You know.
Don't want 8.
Yeah.
But 6 is just like having a 3.
Yeah, we got people with questions here, actually. Man, we got some good questions here. Cole actually said, I got an FHA on my first house a few months ago. There's a lot of mortgages in the comments, guys. I'm just going to let you know. You might want to go back and check them out. Hit that like button, y'all. If you want a mortgage, actually, if you would like a quote or a rate, go ahead and hit that like button, and someone will reach out to you. Operators are standing by. This is great. Scott Williams said the gap from average 2-bedroom apartment rental costs and the average entry-level homes are still way too big. Rates are only part of the equation, but we have been working against inflationary times, rising home prices, and property taxes in this market are crazy. But we do have nice schools. Oh gosh, insurance. These roofer scams. That's what I mean. That's a whole nother topic. It's these roofer scams. Yeah. Sheila has a question. Hey, Sheila. Sheila Benavides says, what down payment options do you have? Renting can be costly monthly as well.
Sure. We've got 0 down payment, 3%, 5%, 20%. I mean, it's.
You had me at 0. Yeah. Okay. You had me at hello.
There's a lot. VA is 0. We've got some bond programs that allow 0 down payment. So, I mean, it really just depends on what you qualify for.
How much of a premium is a 0 down payment? Am I paying is it an extra point, 2 points, like percentage, like on the
about a point higher in rate, but it's with the bond. I mean, there's forgivable seconds, which means that like the city or whatever the provider, where they're actually providing the funds and it's forgivable after a certain amount of time. Some of them are repayable. So there's a lot of options just depending on what county you're in and what different down payment assistance programs are.
Dang.
Yeah.
Can I get a second home with a 0%?
No.
Can I get one of those? Can I get like an Outer Banks discount special? Can I go? Okay, just checking.
No, and a lot of those are for your lower income families. Like it's trying to help homeowners.
Here's one for you. Mm-hmm. I got a low income VA person for you.
Okay.
My father-in-law. Okay, served. All right. If he wanted to retire, and he's retired. If he wanted to move down here to Texas and live near his favorite son-in-law,
sure.
Would he qualify potentially for?
I assume he's got some type of retirement income.
Social Security. Social Security. Yes.
I mean, we could definitely look at it. Absolutely. I mean, VA is very broad in what they will allow as far as debt to income ratios. Like they accept a lot higher because they know that they're helping out veterans.
Oh, nice.
Yeah.
Somebody's got to help him. It ain't gonna be me. I'll tell you what. No, I love him.
You don't want him to live with you?
No, I mean close. Yeah, close. Not inside. Outside voices, right? No, he's great dude. He turns 80 next month.
Wow. Good for him.
Yeah, for real.
That's winning.
Yeah, that is winning, and he's still in good health, thank God. Yeah, this is great. We got we got a question from Daisy, a live studio audience here. Daisy says, how did you get started in the mortgage industry and what's kept you passionate about it, Scott?
I come from a family of mortgage bankers. So my dad was in the mortgage business. All of my uncles, my brother, 2 of my cousins.
For real?
Are all in the mortgage business. None of us work for the same company, but yeah, I grew up. I actually went to school I thought I wanted to be a stockbroker. So I've got a degree in finance and I'm a certified financial planner as well. But when I came out, it just kind of pulled me in and got into the mortgage business. And obviously, I'm pretty good with numbers, so it's that intrigued me and like solving problems and helping people. And I love it. It's always changing. Like you're never doing the same thing. There's always new challenges that come up. There's new things that come up. It's like, yep, never seen that before. but you get to work through it and try to solve it and help people. I mean, getting people into a home, how much better does it get than that, right? Like you're getting to solve their biggest, help them with their biggest financial.
That's their biggest asset, right?
Absolutely.
And it's where you make the memories, right? I mean, your core. I mean, that's pretty cool.
It's fantastic.
It's your biggest financial assets. The canvas of your life is there.
Yeah.
Yeah. What about you, Jonathan? How'd you get in the mortgage business?
Pure luck. Oh, honestly, my first job out of high school is I managed apartments for a company called Equity Residential, and I did that for about 10 years, and then I relocated up here to work for them, and I somehow got a call from a company called Relo Action, and they asked me if I would like to be an associate in corporate relocation.
Did you know what that meant, an associate in corporate relocation?
I had a little bit of knowledge behind it, but it was just because of temporary housing. And so then I started, and I just took off from there. And then I got into mortgage through Bank of America back when they had a Relo mortgage team. And I had explained to them, I was like, I don't know mortgage. I know enough just to make me dangerous. And they said, no, but relocation. Relocation management companies. You know how to communicate with the consultants and the management teams.
Right.
They're like,
it's a different beast.
Right. And they're like, that's what we need. We'll teach you anything and everything you need to know about mortgage, but we just need you to know how to communicate with the Relo teams. And so I was there for a little while until they closed up shop. And then, I worked for a couple different RMCs, and then finally I got a call from Chappie here, and he's like, would you be interested? And I'm like, heck yeah, I'd be interested.
Yeah.
And 5 years later, I'm still here.
Still here, still interested. There you go.
Love it.
Amen. Love it. That's awesome, man. That's really cool. We got a question here, and then we're going to get into trigger leads here because I have no idea what that means, and I want to find out. Caroline Cook says, is the NAR settlement affecting or scaring people away from buying a house?
No, it's had so little effect.
Isn't that crazy? Because it felt like the sky was falling about it.
Oh, yeah. I was on weekly meetings with WERC, and I mean, there was huge collaboration of different groups that were meeting, just trying to anticipate what was coming up. And I mean, we were really all prepared, but there has been little to no impact. It's a couple dollars here or there as far as commission changes and stuff like that. But it is.
Do you see the commission in the way the splits are with the buyers versus the sellers?
Very.
Does that appear though? That appears in the mortgage, right? Because you break out who gets what money, don't you?
Title companies will.
Oh, title companies.
Yeah. And on the sales contract, it'll list out who's getting what. But
so have
it
you
really
tracked
hasn't changed
the splits
much.
at all in the change?
Yeah.
Okay.
It's very minimal.
Negligible.
Yeah.
Yeah,
Wow.
I actually did some reporting for one of my clients where they wanted a report showing how many they paid the commission on. I think on that particular report, after 50 closed loans, I think we had 7 that had the commissions included. And it also it's going to depend on
small
region.
loans.
Yeah, it's very small amount, and it wasn't a full 3%. All of them were 2% or less.
Yeah. Super interesting. So maybe that's about 10, 12% or 10, 15% maybe. It sounds like impact there. Really interesting because it sounded like it was going to change everything.
Right.
It's funny because the real estate industry or real estate NAR really did not do a good job of getting in front of this, but they did a good job of catching up to it. I saw the same thing in the moving industry when the kind of catastrophic global household goods contract came out, and the moving industry did a terrible job of getting in front of it, even though there were signals, but they did a fantastic job of catching up and kind of thwarting it at the end. So it's really interesting to see the way that these things play out.
I would say the biggest impact is that it's just the disclosures are clear, like where the money's coming from, and that there is funds distributed between the two parties. Where that was kind of like there was agents out there saying, "Yeah, it's not going to cost you anything." Well, yeah, it is to the buyer, right?
Yeah.
Because it's coming out of the seller. They were saying everything was coming out of the seller. Well, no, because you're buying it and you're paying a higher price. It was built in.
Right. I will say when I bought my house, because I bought it during the time when that was taking effect, it hadn't taken full effect, but it was taking effect.
Right.
It was such a weird time. And the language was included. I had to sign like an addendum. And it said, if we can't collect our commission from the seller, you owe it.
We're coming after
And
you.
I said, nah, I'm not signing this. Like, no. It doesn't really mean that. I'm like, it says it.
Right.
And that's one thing I got to say about buying a house. You sign a whole lot of things that people say, oh, that's not important. Don't worry about that. That doesn't mean anything. Then why didn't you make me sign it? You made me sit here for an hour and a half, sign 50 pages of stuff, and tell me none of it matters? It feels like it matters. You made me come in with a wet signature and sign it and tell me it doesn't matter. That's not you guys. I'm just saying. The royal you, the people,
sure.
the world out there. And it's kind of funny, you know. So I guess really my takeaway from that process is you really do have to trust the people across the table from you, because you're signing a document and you really don't know what it means. And you have to trust that the person across the table from you is not trying to take advantage of you.
Yeah, and that scares me. Somebody saying, "Yeah, don't worry about that," because that tells me they don't understand it either.
Or
Because
can't
like if
explain
I
it.
was there or one of my loan officers there, they would explain, "Okay, this means this," because that you deserve that, right? Like you're spending a lot of money, and if there's something, if you have a question, you need to have the answer.
Yeah. Why am I signing it if it doesn't matter?
Right.
The last two times when I bought a home, and I was dead set on using a relocation real estate agent, because their background is that they want to build those relationships and they don't want to lose relationships. And so I had a lot more trust in the relo certified agents. So I always reach out to some relocation director that I knew at one of the RMCs and to say, who can help me?
Yeah. Yeah. I think that's really, really great. And I'll be honest with you, like I piss off so many good friends in this business because I don't use any of them when I buy a house. And I'm sorry, Chappie.
Yeah.
I really love you so much.
Yeah.
I do. But it's so weird because you're letting people like you're sending them all your tax returns, you're sending them all your personal business, you know, and you know, you're probably going to I talk to more than one mortgage company. Right. And it's very, you know, it's very in your underwear, you know, and I don't really want to do that with my friends, you know?
I get it. I do.
And the other thing is too, when I first moved to Dallas, I tend to make these things about myself. I apologize. It's whatever. It's my show. But when I first moved to Dallas, like everybody, I knew a lot of people in the mortgage space and the real estate space, and they're like, yeah, call me, and I'll help you out, you know. And I moved to Dallas, and I called a lot of people, and nobody could help me because I was embarking on entrepreneurship journey, and there was, oh yeah, you're a brand new entrepreneur. I need 2 years tax returns. I basically need 3 years of you being in business, 2 complete years tax returns. And it was very disappointing, and it wasn't anybody's fault.
Sure.
I do wonder sometimes, had I written myself a letter offering me the job of CEO of Glomo and the salary of X, if I could have gotten approved for a relocation loan. Probably not with Chappie, he's too smart. But some of these other ones, right?
He can maneuver anything.
Yeah. You know, it's, I get both sides of it, right? Like it's, there's a lot of failed businesses out there, right? So there's a lot of people that are going in and they're either making a lot of money in the first year and then something happens and then they lose money and they fail. So that's why they want to see the history. And it's not that the lender, it's that the secondary market, the mortgage market, they make the guidelines and say, hey, you know, we're lending a lot of money. Nobody wants to foreclose on anybody. Right? So
I appreciate that.
Right.
Thank you.
So that's why these guidelines are in place to make sure that, you know, that we don't have a bad asset and that we don't have to kick somebody out of their house.
Yeah.
That just sucks.
Yeah. You'd rather not give me a house than kick me out of it. And I appreciate that.
Right.
No, it's all good. Lesson learned, right? But no, it's important to do business with people you trust, though. I think that's where I was going with it. I want to hear about trigger leads
Sure.
because I've heard about this and I don't know what it is.
Sure. So trigger leads, a lot of transferees will have experienced trigger leads and probably didn't know what they were called. But basically, anytime a mortgage company pulls credit, it creates what's called the trigger lead. So the credit bureaus sell that data. So they, like, let's say I pull your credit. Well, credit bureau is saying, hey, Ben Cross had a mortgage credit pull, and they sell it to whoever wants to buy it.
And is that a hard pull or a soft pull?
Hard
because they's like, okay, now you always get that stern talk. The octave drops. It's like, okay, now
I wasn't gonna inundate you with that at first. But the hard pulls are the only ones that trigger.
I'm gonna pull your credit now.
Yes. So you do a hard pull, then it's going to create that trigger. So then they sell it. So then the transferee gets 5, 10, 15 extra calls out of network lenders calling them, knowing, hey, I know you're trying to get a mortgage.
Oh.
So then the relocation company or the client is saying, hey, why is my employee getting called by 10 different people? Like, are you selling, going to the RMC saying, hey, are you selling this to other lenders? Like, no. So it's not us. It's not the RMC. And it's not the client.
They just buy it from the credit bureaus.
So they're charging us $80 to $100 for each credit bureau. And then they're selling the data on the back end to other mortgage companies and then they cite.
So the credit bureau charges you for the information and then sells it
it's ridiculous.
to your competitors.
They've increased
Talk
their
about a
fees.
cartel, huh?
Oh yeah. So it's there had been legislation that was presented. It almost passed in 2024. It was tied in with the defense bill. It got all the way to being approved, and then it got kicked out of the bill. The bill got approved, but it got pulled out because the credit bureaus went down and they lobbied for it and probably lined some pockets. I don't know. You didn't hear that here, but there was probably a little bit of that happened and it got pulled out. So it did not pass in 2024. Got reintroduced 2025. Passed the House, passed the Senate. They merged the two bills, and then in August it got approved. September 5th, Trump signed the bill, and then there's a 180-day waiting period until it goes into effect. So March 5th of 2026, this goes into effect. So it doesn't. Does that explain what a trigger lead is?
Yeah. So it's a lead that's triggered by the credit bureau pull.
Correct.
thing?
So what we had to do as an industry, and most of your relocation lenders did this, is they would do soft pulls. So what that does is it gives us a glimpse into the credit report. It's not a full credit report, and it's not something that we can use to fully sell the loan.
But you can give me a quote kind of thing or a rate.
Right. We can do underwriting. We can do a lot of it, but you can't do. But you have to do a hard credit pull towards the end. During that period, we would have people opt out pre-screen, which stopped trigger leads. But it was a whole process, right? Or still is a whole process.
So they have to opt out. They
out.
never opted in, but they have to opt out.
Opt out, right.
Oh, that's nice.
Yeah, so it added another expense. So now the credit bureaus are getting a soft pull fee from us. Then they're going to do the hard pull. Then they're going to sell the trigger leads. So the credit bureaus are making out like bandits, right?
And it's so funny because you look at a credit bureau like it's some sort of nonprofit organization that exists for the good of consumers and transparency. Jonathan laughed. And Jonathan, I haven't heard you laugh that hard. I don't think ever at anything.
I like how you said the good of the industry.
Yeah. They do. Oh, the credit bureau. They're just trying to keep everybody honest out here.
No, definitely a for-profit.
Oh my gosh.
I mean, in an industry that's been hurting since COVID, right?
Yeah.
The credit bureaus have been making money hand over fist and have increased their fees year over year over year.
Well, because there's only a few of them, right? There's 3 of them.
There's 3.
What if I want to be a 4th? Can I get on this? I want to.
There's talk about going to a single bureau, and actually, that our head of operations is on a committee that's submitting that to Washington D.C. on going
a single bureau. Would someone own it, or would it be government controlled at that point?
To where to Fannie and Freddie and the servicers would accept just a single bureau as opposed to needing a tri-bureau.
Well, because also, I mean, with the tri-bureau, there's different information sometimes. You have a certain score here, certain score there.
Yeah.
It's like you got the ACT, the SAT, and I still can't get in.
Right.
You know what's going on? It's super interesting stuff. I didn't know about any of this. I knew I hated them. I didn't know why. Thank you for letting me know. Sherelle's chiming in here. This is a great article fresh out yesterday about the housing market. There are a lot of sellers who want to sell and they are waiting for a dip in the rates in order to put their homes on the market. So there's buyers who want to buy and sellers who want to sell on the sidelines. I'm sensing pent up demand.
Yep.
I'm sensing we're going to be drowning in leads. You know who I'm worried about? I'm not worried about you guys, no offense. Y'all just need to buy more phones and more office chairs. I'm worried about the movers and the corporate housing folks. I'm worried about people that have to operate assets, that have limited assets and inventory that they have to operate, right? Because it's going to be a crunch, I feel like.
Yeah, but at the same time, everybody's just chomping at the bit, and they're waiting. They need it. They want it. They need that business.
Yeah, I'm excited for it, but we got to be positioned to take advantage of it, right? For, God forbid, we get all this business and we're staffed, we're not staffed for it, and so it's like, how do you staff for business that's coming? It's Q1 26, y'all. It's around the corner. It's like we're around the corner of Magic Mountain, right? Where it's just like that never is. But how do you staff for that, without overstaffing?
Well, I know a lot of the household goods providers and corporate housing agents that I get to communicate with on a daily basis. They're ready. I know they're ready. I would have all confidence in them.
Yeah. I would say on the mortgage side, COVID was definitely a really good trial run because we did 3 years of business in 1 year. It was hand over fist. Everybody was a refinance candidate, and you had people buying, and it was just coming. It was shooting fish in a barrel, right?
It was like those videos where the fish are jumping into the boat.
Yes,
Yep.
and
They're smacking you in the
right.
face.
So you had to do a transition from working in the office, printing, working with physical files, to working from home, going to PDFs and working virtually, basically.
Yeah.
And everybody adjusted quickly, and we had a year before we had done a loan origination system change. So we had changed all of our systems. Thank God we did, because it was a game changer. It allowed us to just pivot, handle everything, and not skip a beat.
Love it.
Yeah.
Scott Williams says, great show, guys. See you at work. What are y'all doing at work? I'm hearing rumors of a really cool event you guys are throwing.
Yeah, we're actually teaming up with Stewart Title Relocation.
Nice.
And having a VIP event where we're going to be doing some glass blowing.
Okay.
Yeah.
Glass blowing. That sounds familiar.
Yes. We have several corporates and relocation management companies that are going to be attending. And, of course, we have an open invitation for the Glomo team.
Well, Daisy wanted to. Daisy just is asking. Daisy loves inviting.
Yeah, come. Yes.
Daisy and live studio audience members are invited.
Yes.
I got to tell you guys, I love glass blowing. I'm in art and stuff and like sculpture and painting and stuff like that. I'm really artsy kind of guy. And I did glass blowing once at a client event in Manchester, Vermont in 2014 or something like that. Unbelievable. Still have the glass.
Yeah.
So much fun. I'm so stoked about this.
Yeah, we'll be doing it on Tuesday, October 28th.
Okay.
It'll be at the Red Flower Studios. It's right across from the venue where work will be going on.
Okay, Red Flower
it's-
Studios.
Yeah, so it's to be walking distance for everybody.
Right across from the Salt Palace. What time of day is that?
3 and 5.
3 and 5. But
3 and 5. There's 2 sessions?
2 sessions.
Yeah, so it'll go on all the way till 7. But if there's a lot of people that are signing up right now because they don't know exactly what their schedule is, so they just want to come and watch. So you can come and watch anywhere between 3 and 7.
But they need to register with you.
Yes, you got to either register with me or Chappie, or you can also reach out to Cindy Spoon and Sherelle Kilgore, and they can get you registered also.
Sherelle says she'll be blowing the hot air. Nice. Caroline says me too. Daisy, are we going to be there in time for that? Are we flying in Tuesday?
Right.
You just invited us. You have to.
Realize it's the 28th.
Daisy is like, if she wants to be everywhere all the time,
You want me there.
I want you. I sure do. I was just talking about Daisy glass blowing. Yeah. So that sounds awesome, y'all. So get with Jonathan on that, and excited about that. I know we're running out of time here. Sammy's like, I gotta go to class, man. Okay, I can't be fooling with y'all. All right. I got so many things I want to talk about. I mean, I want to just give us a quick plug of for NTRP and some of the things you're looking forward to, Jonathan.
Well, December 5th, we have our holiday event coming up. Is going to be what we kind of call a Western wear rustic
Okay, maybe some pearl snaps.
Christmas. Yeah. So you know, if you want, you can wear the cowboy hat and the boots.
I don't know if they make pearl snaps in my size. I'll be honest with you. I need more than snaps.
But it's gonna be a great event. It's gonna be a toy drive for the Minis Food Pantry, like we do.
All right, nice.
The last couple of years, it'll be at the McKinney Flour Mill.
I like that venue.
Yeah, it's an amazing venue. It's really neat.
It's like that real rustic looking one. It's like a good wedding venue. I think I know that one. Yeah, that's a beautiful venue.
Yep, it'll be right there in downtown McKinney, December 5th. So right now we have the early bird pricing. So if anybody wants to sign up, I suggest that you get signed up.
All right, well, Glomo will be there. We'll be rolling deep to the flour mill. Maybe we'll tackle on our holiday party that night.
There you go.
Who knows? Daisy gives me a thumbs up.
The more the merrier. We always enjoy this event because it's all about the giving back.
Amen. Amy says she's coming. Me too. I don't know if she's me tooing, but hopefully it's not me. Very cool. And then next year you're going to be the president.
I will be the president. I've got some really big shoes to fill with Sherelle.
St. Cheryl's got big feet.
No, well, she's been an amazing mentor. I'll say that. She's a fantastic leader and an amazing mentor. And she's been not only doing her role as president, but she's also been teaching me on what I need to do, what I need to work on. She even sent me a text that says, "Smile and be positive." So
Nice.
So she's always looking out for me, and I sincerely appreciate her, and I also sincerely appreciate Patience Holly.
Yes.
Back when she was the president, because Patience is the one that I had a few conversations on the airplane with her, and she said, "You know what, Jonathan, I want you on the board.
Yeah.
You know, I like everything that you are about and how you communicate." And sure enough, that year she got me on the board as under membership.
Shout out to Patience Holly. I'm just putting her in the comments there. Yeah, I love Patience. Hope you're doing well, Patience. Next year, anything you're looking forward to from a program standpoint?
Oh, definitely going to be the Lone Star Relay Conference.
That's going to be good.
That's going to be really good. I mean, who else could actually sit there and say that they have rented out Billy Bob's in
That's
Fort
going to be
Worth?
sick.
I mean, it's going to be a honky.
Now, talk about some big shoes to fill. Billy Bob's is going to be some big boots to fill.
Yes.
That's a big venue. There's a lot of memory. That's the world's largest honky tonk. Are you now? The question on everyone's mind, Mr. President-elect, are you going to ride the mechanical bull?
I'm not going to ride the mechanical bull, but I will watch everybody else ride the mechanical bull. And actually, we're going to have the plan is we're going to have live bull riding there also.
I love that. I just took my kids to the rodeo in Fort Worth 3 weeks ago, and they absolutely loved it. I'm a big fan of Billy Bob's. The rumor is my parents met at a honky tonk, so good things happen.
Yeah.
Wow.
Yeah.
Lots of history there. Just walking through and seeing all of the photos of the different country music performers that have gone through there is just, it's amazing. I'm looking at people from my childhood that were my dad's favorite artists, back in the 40s and 50s and 60s, and then to, all the way to today.
Yeah. Wow. Awesome. Well, I can't wait for that. I hope to go check out those venues down there too, and see which hotels and everything everyone's staying at. I've been saying since I moved here, we need to have a event in Fort Worth. I absolutely love Fort Worth, and I'm so excited that we're doing something not only in Fort Worth but in the stockyards of Fort Worth. That is like one of my favorite places in the world. As you can see, I've lived a sheltered life. Scott's over here in the Vatican, and I'm over here in the stockyards. But go figure. Hey, you know what? I know we're running out of time, but we got time for one more thing. Let's play a little game here. Y'all want to play a game with me?
Sure.
Let's play a little overrated, underrated, huh?
I'm scared.
Let's do it. Want to play a game? All right, let's go. Overrated, underrated. Do you know how to play the game?
Yes.
say
Y'all have both been on the show before. Y'all know how to play.
Yes.
All right, here it goes. I ain't gonna be gentle. Let's go. Y'all are veterans. First one, overrated, underrated. 6% interest rates.
Yes, technically overrated.
Yeah.
Overrated? Overrated, huh? Overrated how?
I mean,
It's not 5.
yeah.
It's not 5.
I'm on the fence. Underrated. Still good.
Still good.
Still good.
Doable.
Doable.
Feasible.
Doable and refinanceable.
What did I get my rate? My rate was like, I don't even know what my rate was. That's probably a blessing. If more people didn't know what their rate was, I think the world would be a better place.
I think about 95% of the people have no idea.
As long as you
And
can afford the
after
monthly
they close,
payment.
they don't know what their rate is. Like up until they close, it's the most important thing, and then they don't. It's the only thing they know to ask.
Yeah, I think this whole interest rate environment concern thing is overrated presently right now. I think the 6% interest rate itself right now is underrated. I think now's the time to buy. I look at actually the housing market is a little soft right now. The prices are softening right now because of demand, because everybody's waiting. And what did Warren Buffett always say? He said, when people are scared, be greedy. And when people are greedy, be scared. And I think right now people are scared in the housing market. So it's time to be greedy. Go out and buy yourself a house, get yourself a deal, and I think now's a great time. I think we're going to look back a year from now and look back and say, man, it was a good time to buy. And they're going to quote Ben Cross. Anyway, all right, moving on. Next one up, overrated, underrated. The Lone Star Relocation Conference.
Oh, that's going to be unbelievable. So I have to say it's underrated.
Underrated?
Underrated.
Yeah. First time.
First time we're going to have Houston, Austin, and North Texas relocation.
Fantastic.
That's going to be incredible. That's like when the Power Rangers put their fists together and like a big thing comes out of nowhere.
Yeah, that's exactly what it's looking
Kicks
like.
butt or something.
Or something.
I might be conflating my lore. Anyway, yeah, no, that's gonna be awesome. Truly underrated. Can't wait for that one. Let's see. Caroline says, I've never been to a honky tonk. Girl, stop. You got boots?
Missing out.
Are boots required? They should be.
Oh, it should be, but
I'm spreading
it's
the
optional.
rumor. Hats and boots required. I heard you get a discount if you wear hats and boots. Is that correct?
I'm sure we could arrange something.
All right, next one up. Overrated, underrated. The government shutdown.
Overrated.
Overrated?
Yeah.
I'd say overrated.
Yeah, it's not affecting things as much as you would think. I mean, rates actually come down a little bit during this, or it has come down a little bit during this. And the reason is there's what's called a flight to safety, meaning people, they're scared of what's going on in the stock market, and they'll take money and they'll throw it into the bond market. And what that does is it brings the bond yields down. Mortgage rates track the bond rates. So, it hasn't been bad for us. Now it does affect like flood insurance. So it'll affect certain parts of the mortgage industry, but and USDA loans, but we don't do a lot of USDA loans.
It was like farm loans or something?
It's rural property.
Okay.
So there's certain aspects, but very, very small portion. So I would say overall, the shutdown hasn't affected us horribly. Now, if it draws out for a long time, different story. Then you've got a lot more fear sets in the market and changes things. But as of right now, it hasn't been bad for us.
Is there any kind of a light at the end of the tunnel on the government shutdown? I mean, do we have any kind of like a projected like this thing's going to be done like in a day, a week, and people are going to show up and sort this thing out, or are we just going to like hang out in this?
I left my crystal ball in there.
Man, you've been prognosticating for the last 72 minutes, man. All of a sudden you broke your
Where's
ball.
the magic 8-ball around
You've
here?
got a lot of strong wills that are fighting each other, right? So I mean, who's gonna cower first is what it's gonna boil down to.
Sheesh.
It's they've got to come to an agreement on some things. There's gonna be some bending and
Yeah. All right. Next one up, overrated, underrated. Buffalo Bills.
Oh,
I will say they're always underrated because I think they're the best. It's now I don't know what happened this weekend, but you can't be perfect, right?
I guess you can't be perfect. I love a good Bills fan. I love a good Bills fan.
Buffalo Bills.
Yeah, I love Chappie's a great Bills fan. I love a good Bills fan. They're the only ones that don't throw Super Bowl wins in my face as a Cowboys fan, and I appreciate y'all's class, and I respect you for that.
It's because we can.
So I appreciate that. No,
This year's different though.
Yeah. Now that's my line. That's the Cowboys line. What are you talking about? I'm going to drill down on this Buffalo Bills topic. Josh Allen, overrated, underrated.
Oh,
I mean, he got MVP last year, and they're saying he's.
How's it underrated then?
I'm never going to say he's overrated. I mean, just an unbelievable person.
Yeah.
I mean, he's a good guy, unbelievable player. I mean, there's not much you can say bad about him.
Yeah.
I mean, there's a lot of professional athletes that you just see that money goes to their head and they don't do good things. Like they're not good people.
Right.
Where Josh, you can just tell is a good person.
Yeah.
Loves his wife. I mean, you can just see when he talks about her, you can see the love emanating from him. He's a man of God. I mean, there's a lot that is appealing to me about him. Not appealing in that way, but he's just a good dude, right? Yeah, no. Shut the show down, man.
Cut. Do we have one more, Sammy? One more. Overrated, underrated. Glass blowing.
it's underrated.
Underrated, yeah.
Have y'all blown glass?
I have.
Okay. What'd you blow?
A glass, like a drinking glass. Yeah.
Okay. All right. Thought it was a Josh Allen statue. Oh, all right. That's great. Is everyone going to get to blow the glass, or is some people going to watch? Because I know it's hard. Like, it's not one of those things where, like, it's not like painting where everybody gets a canvas.
Right
it's
now,
kind of hard to do.
Right now, there's some spots open to actually
blow
make
something. Okay.
But there is also the come and watch tickets.
Right.
So,
Okay.
Right. There's quite a few people that don't know exactly, because there's a lot of stuff going on,
Yeah.
during the day in Salt Lake. So some people are like, I just don't know what time I'm going to be able to get there.
Right.
I don't want to put me down and take up somebody else's time slot.
Yeah.
So they'll schedule just to be just to come in and network between 3 and 7.
My experience with stuff like this is if you're really intentional about it and you really want to blow a piece of glass or something, you can probably get there and blow a piece of glass.
Yeah, we'll make it work. Yeah.
Cool. Awesome. Guys, this has been a fantastic show. I've learned a lot about you guys. I've learned a lot about interest rates. Probably more questions than answers. No, just kidding. I know that 6 is the new 3. 8's the new 22. But can't wait to see you guys in Salt Lake City, and
Looking forward to it.
Yeah,
appreciate
for sure.
the opportunity to be here with you guys.
Thank you. Appreciate you
been
always.
great. Yeah. Hey, thanks everybody. And we will see you Friday live from Louisville, Texas, where we'll be with Acme Car Shipping. Can't wait. Take care,
Awesome.
guys. Thanks, Scott.
Bye.